This is a trade recap of how I made $331 day trading gold. So my daily buys, I was bullish, right? And this setup, this trade right here was really, a lot of things in this setup went wrong. It's not that none of the executions, it's just that what I thought, the thinking part of the trade was really bad for me personally, which I'm definitely gonna fix up, right? So now let's go. I'm gonna go over my daily buys. I was bullish. The 400 liquidity is bullish, right? 400 liquidity was bullish. 4 hour buys was bullish, right? 100 liquidity was bullish because the fair value gap. Although this week you're saying, okay, fair value gap already got filled once. Why are you using it again? It got a deeper fill. Let's look at this fill. This fill was really small, right? Compared to this fill is really small compared to this, right? So this one got a big fill. So after that, I was looking for a 15-minute confluence. So at first I was looking for a 5-minute, right? Because the hourly time frame did not break it down when I was trying to look for an entry. Probably saying, well, why did you not enter over here? Because you had a buy pattern. Now you would have made way more profits, right? You gotta think about it. Sometimes things like this might happen, but sometimes it will not happen and take me out. And we want to take out the safe way and not the wrong way, right? Where right when the market showed that as hourly high, hourly low, I was looking for a entry, right? And right on news, market pushed out the 15 fair value gap, and this is the first time I ever seen the 15-minute drawn liquidity being against me. So like, okay, now I have to, because I'm looking for entry, right? So right when I'm looking for an entry, the 15 minutes starts to matter for me. So right when it switched out the liquidity, then I'm looking for entry, because now the 15-minute time frame matters to me. Touches the drawn liquidity. The market the drawn liquidity never changed back to the bull side, because this all the making around liquidity. Eventually I was like, okay, now I have to look for another 15-minute, which I never had. Now the hourly time frame, he touched the hourly drawn liquidity, hourly fair value gap, right? Which is said that even like right when it gets touched, is like it changed the drawn liquidity to bearish, right? Although it did do that, but it got inverse, right? But regardless, right? Even if it did, right? The factor check was winning because what? So why was the factor check winning? 400 liquidity was bullish, 4 hour bias was bullish. Let's just say 100 liquidity was bearish, right? It wasn't bearish because it closed above. 1 hour bias was what? Bearish, right? But guess what? We had an hourly confluence, which is the order block, and this other order block, 4 hour order block and an hourly order block, right? Which was enough. Plus we're looking for a 15-minute confluence, right? So this wins. So next time when we're doing this, it does not matter about the hourly, right? Even the hourly against you, the hourly drawn liquidity doesn't really matter, right? Because this is what I'm having wrong with, right? The hourly drawn liquidity does not matter. What matters is that factor check winning. If the factor check says, okay, I'm green, I could go look at, I could go into the trade, because my side of the market is winning, the bullish side of the market is winning, so I could enter the trade because I have a 400 liquidity with me, I have a 4 hour box with me, I have an hourly order block, I'm looking for a 15-minute confluence with me, right? And the only thing that's against me, hourly buys and hourly drawn liquidity, right? With that, saying every time the drawn liquidity, this order block was still active, it was still active because no entry, no execution entry, right? Until we go over here. So once you touch the fair value gap in the hourly time frame, I was like, okay, now I'm looking for a 15-minute confluence, right? I'm still looking for 15-minute confluence because this 15-minute hourly order block was still in use, it was still in power, right? So like, okay, let me go look for a 15-minute confluence, which I never had over here, which I had one right over here, the 15-minute fair value gap. With when it touched the hourly order block, it did a retracement, it did a healthy retracement back. Okay, I was like, okay, this fair value gap could get me in, and this order block could get me in, right? So now once it did that, I was looking for a 5-minute confluence. The first 5-minute confluence, which was what? It's such a liquidity which did not match with no higher time frame confluences. This did not match with the higher time frame. So okay, that's green for me. I could take that. Where the market set the liquidity, all this is the fair value gap, this is the liquidity as well, right? So it saw the liquidity. I was looking for a 1 minute, so I went to the 1 minute time frame. I had 2 entries on this. I had one entry which was the original entry, and I had a bad entry which I just got out and got in, right? Because I knew you're gonna, I knew, but I'm gonna talk about thinking of the game, right? Because I know I did something wrong. It is not, I didn't think it's wrong. I think negative about it, right? So let's go over here. So my entry was what? So the liquidity, this fair value was still in power. This right here, close above it, right? I was like, okay, that's bullish, right? So now all I'm looking for the 1 minute confluence, because this fair value got invalidated. But well, you're saying, well, there's another fair value gap, but one fair value gap, all I care about was one of them, right? This one was far away from each other. This one was all the way over here. This one's all the way over here, right? So that if this one gets invalidated, inverse, That's bullish for me. That counts as a break of structure for me. I was looking for a 1 minute confluence, which was this order block. Prior to that, I was looking for even the other fair value got inverted. So I was like, okay, put there, put a stop sign below that because it created a 5 minute high. Paired with that, I got another. I did another entry over here, which this right here was my real entry. Never got this one, but this one would have been my real entry, but I only got this one right over here, right? With that, I was looking for like, okay, now what do I do wrong in this trade? I was like, right when the market went down, I was like, okay, this is gonna go hit my sell stop. Yes, I should be expecting to lose the trade. Yes, I should be expecting to lose the trade, but guess what? I have to look at the chart. You know what I'm saying? Like, oh, he's gonna go hit sell stop. So let me just delete the, you know what I'm saying? I didn't delete the trade on the trading view, right? Not trading view, on the trade locker, right? But on trading view, I just deleted it, right? But that was the wrong part. I should have looked at the trade. I should have known that my setup will deliver. I gotta trust my setup, right? Although I might go in drawdown, but I have to trust my setup. I cannot go against my setup, right? Because we had all this conflict. The factor check was winning. Why does a small ass pullback can just fuck up our whole thinking, right? So next time what we're gonna do is think positive, know that our setup will deliver, but we have to expect to lose. Losing is part of the game. If we know that our setup will deliver, go to our buys, but we gotta expect to lose, because if we don't expect to lose, if we expect to win, and let's just say let's go to hit my sell stop, now emotion gonna get kick in, right? Now I'm like, oh, I messed up this, let me change on plans, right? So what I can do next time is trust the plan, know that the setup will deliver, and other than that, everything was fine. I did my trialing right, you know what I'm saying? Trial was right. When the market was up over here, I tried my stop loss right over here. Right when the market was up on this, I put my stop loss over here. From here on, select the trade right to TP1. After TP1, I'm looking to try my stop loss again, but the 15-minute time frame never closed above it, and eventually it came back down. You can see it came back down. Would have taken me out at break even, so that's a really smart move I did. It's a really good trade, but the psychology part of the trade was bad. It's not that I had emotions, it's that the way I was thinking, right? I think about, you know what I'm saying, I think about that. I didn't trust that it would deliver, right? That with which, although I backtest every single day, it still happens because, you know, the drawdown pays, right? I got in drawdown recently, right? So other than that is, what else bad I did is that I should not care if the factor check is winning. If the factor check is winning, I shouldn't care. I should be looking for an entry, right? Because the factor check is winning. You know, it's 3 against 2. So which wins 3, right? So next time is keep in mind that even when the hourly time frame is telling us that it's bad, even if the Alexander liquidity sometimes is against us, right? Even if it's against us, if the factor check is winning, we're gonna execute. So that's my trade recap of how I made $331, which was basically like 1.43 RR, and it was on a 50k account. So I de-risked to 0.50% as well. So yeah, really good trade. I liked it. I like the way it went. It went with me. But over here, I never had a setup, so that's good. I waited for that and I executed over here. But one thing we gotta keep in mind, once again, we cannot let that thought get away. We cannot let other people's opinion while trading. Our opinion is the only thing that matters. And with that is, do not know that your setup will deliver. Thank you for watching.